Hey there, welcome to the channel. So today we're going to take a look at what happened in the week of stocks. All right, so looking at the SPY, you can see that we've had, it wasn't that it was such a horrible week in the stocks, but what's really going on here is that, hey, we had come down below important moving averages. We kind of had like a death cross, and now we're kind of swinging back to kind of maybe recover because we had a couple good weeks, 3 weeks ago and back. But then this week here, what you've done is you've kind of just was starting to head back down. So one of the interesting things is that on the SPY, we actually made it back above the important moving averages. But now let's look at the Qs. On the Qs, this one, it looks even worse here because see, it just kind of really failed. It basically failed to get up and stay above the moving averages. And now we have this distance from, we have the shorter term equivalent of the 50-day, well below the 200-day, and you've just failed, right there, you just failed to kind of break through. So definitely on the NASDAQ, that's definitely not looking good. IWM, Russell, similar type thing. I mean, more of a different pattern, but it couldn't even get up back up here. So this is definitely, it's one of those weeks that even though for the week these weren't down a lot, it kind of just sets up fairly poorly because it's just you're in this situation where it's setting up very poorly. So these weeks were like the week wasn't really like a super bad down week and everything, but see just the setups of like the QQQ, the IWM, the way it failed below important moving averages, and it kind of just confirms that we're in that kind of downtrend bear market type of territory because these, are staying below the important moving averages. The faster, the 50 week is below the 200 week, the 50 days below the 200-day, and it kind of just seals that in. Now, interesting looking at the dollar, the dollar is still just quite a bull market here. It's still just running up, and it's sort of weird because the gold is still kind of going up too. Now, gold had this spike kind of situation that spiked way up there, but it's kind of almost taking out that you kind of like some kind of a triangle kind of just consolidation pattern here. So really question is, we had this big kind of wedgy triangle thing that we broke out of here. And now this really looks to me kind of flaggish, right? So you kind of have like, here's your flagpole, and you kind of have this compression. It's kind of a pennant pattern or whatever. So because we haven't fallen back below, right? We haven't gone and dropped in below where the wedge was, this could just be a consolidation pattern on that. And so, could be setting up for gold to continue to go higher. Given all the crap that's going on, it wouldn't really surprise me. But it is interesting that gold and the dollar are kind of moving up together. Then looking at the yields. So this was a big week in yields. For the week, the 10-year yield went up 14%. That's just huge. That's bloody huge. So this is really the market is just, the 10-year yield is just going up like crazy. So they're really selling bonds really heavy. And the meeting minutes that they're going to sell 35 billion in bonds a month till they like wipe out their balance sheet is that's a huge amount of bonds to be dumping on the market. It's just huge. So obviously this is being reflected in the market here. You have just these are huge weeks. This is a 14% move. We're up at 2.7% on the 10-year, and 2 weeks before we had another similar huge move like that. And what's interesting, see, you're blowing through potential areas of support, and we're going to be going right into this area here, which is really this is on a weekly chart. This is 6 years of data. This 3.2%, this area up here, this is like we have not been above this for 6 years. It's even more than that. So we're heading rapidly to getting above that 3% on the 10-year. And if you zoom out and you look here, and now I'm looking at 20 years of data, you have been on a downtrend for just decades now. This has been this long-term trend in yields going down, and we are now right over here. You're on the verge of breaking. You break above this, And that really is going to be significant. That is a significant breaking of this many decades long bull market in bonds, bear market in yields. This is what's happening, and it's happening very fast. I'm actually really surprised on how fast it is. So this is really significant, because once it breaks out above this previous peak here, I mean, it's like game on. Now, is it going to just break out and go like that? Probably not. But if it breaks above there, and now you're starting a whole new trend, This, I mean, this goes back to the 90s. This is 20 years of data, and we can go back even further, get longer interest rate charts. This run in bonds has been going on. I believe it goes all the way back into the 80s. So this is a huge C trend. This means huge things, because higher interest rates, okay, like on the 10-year, means lower economic growth. I mean, look, cars more expensive. Anything that needs financing, cars, housing, all that stuff that needs financing is gonna, the value of those, the purchasing power of those is going down, and going down rapidly. And so when you look at a week like this in the yields and you look at it, it's like you can realize how significant it is, because this popping up like this, and this is how the markets go. They pop, they pop, and they suddenly pop, and they price things in. They don't do it in straight linear reasonable fashions. They tend to do it all at once. Okay, let's talk about oil. Oil, is it's a persisting high. And the thing is, we have this kind of, like, we've had uptrend going for a while, and this is sort of this rapid, unsustainable kind of like new rate of uptrend. But it's very interesting that it spiked up to 130 on the Brent. It came, and then it spiked back up again to 120. So it's kind of like, okay, what kind of pattern is here? I mean, it's interesting. Well, we'll see what happens. Like, maybe it's going to come down, all right. So on the bullish side, if it breaks the 95, then, you could expect that it would go a little bit lower, could go lower. It could reverse. Then you have the kind of a weird misshaped double top. The other thing is, if it starts going up to here, then you got to watch the 120, because if it goes and like breaks through the 120, and then that's where it could go up higher from there. So, that those high oil prices, just, there's a lot going on there. So it's another important thing. Then let's take a look at wheat. Now, I don't even know how accurate this is. This is the price. I don't know if it's per bushel or million bushels or whatever it is, but just looking at the price of this, and Peak Prosperity has a good video out on this week. The food riots have already started in some countries. I think it was Peru or somewhere else. You can check Peak Prosperity video, but there's already, like, they already have curfews and stuff, because there's already food riots going on. Once again, we have a situation where, looking at wheat, wheat price has been going up. It's been going up all year. This whole thing in Ukraine is just a disaster, and it's going to be a real disaster. From, like, they need to turn this war off now. They need to turn it off so that they can get planting done. I mean, it's still, we're still April. We're still in the spring. I don't know exactly when you plant. You probably wanted to plant earlier than now. Or right now, but even if you plant a little late, it still would be better than not planting at all. So, someone needs to go in there and turn that war off, but they're not going to do it. They're not even negotiating. Like the West, like, why isn't the president of the United States running in there and being like, hey, look, we're going to go negotiate? Because the thing is, it's like, yes, Ukraine is its own sovereign country. Yes, of course, Russia owns sovereign country. They have to come and work it out. But the problem is, the consequences are for the world. These wheat prices, this is going to lead to widespread unrest across the world. And I would not be surprised if it didn't lead to some unrest in the US too. I mean, you look at all the Floyd George riots and all the stuff that happened with that. I mean, if the price of food goes up, I mean, I just, at this point, given all the homelessness we got, I live in California, the homelessness is incredible, all that stuff. It wouldn't surprise me that we could just be in a situation where we actually have some unrest over food prices here. And right now, as far as it is, I live in California, and whatever his name, Doofus, our mayor, not mayor, governor Newsom, is this like he's going to give everyone like $400 to buffer for the high gas prices? Like, okay, look, that doesn't solve the problem, right? It doesn't even help. It actually does the wrong thing. If the prices are high, the demand has to go down, which normally is what will happen when the prices go up. But the other thing it will do is it will cause the supply to go up, because whoever has the ability to make it, whatever, will normally sell more. But the problem is you're limiting the supply at the same time that you're trying to increase or maintain the demand. So it's going to lead to really messy situations. So everything that all these government leaders are doing is just not helping the situation. So this is horrible. This wheat situation is horrible. And, here we are, we're on a daily, let's go to a weekly, kind of go to a bigger picture. On the weekly, it's just kind of the same thing. You've had this, you've got a longer term, a couple year trend going here. And this, once again, you have this, like with the oil, you have this super spike. But even if this thing comes way back off to here, what's going to happen? Is it going to start riding the trend line up at a more sustainable rate? It could be. So this is really, it's just not good. So I think that's it. Just to summarize then, for this market this week, we really have the sustained high prices in energy. We have really important movement on the indices to reject on the Qs. We're rejecting getting above the 200-day / 50-week moving average on the Qs. We're rejecting that on the Russell. So definitely the small and the tech cap stocks are rejecting that. The SPY honestly looks a little better because it got back above that 50-week moving average, but it's still just, look, it's sort of rejecting. It's really rejecting. It's like, look, it didn't get back up to the old high. So what kind of a situation are you in on the weekly? Lower highs. So lower highs is a bear market. So what's really critical about this is that it's cementing that we're entering or in a bear market. That's it for this one. Bye.